We've touched already in the first one the issues we'll be discussing now. So I'm pleased to introduce again Delphine Damarzi, Chairman and CEO of Euronext Paris. Sitting next to you is Emmanuel GOLDSTEIN, Country Head and CEO of Morgan Stanley in France. Maya ATIG, you're the CEO, not President, CEO of the French Banking Federation. Michel, you're the CEO of OVHcloud, the leading French and European cloud computing company. And Bénédicte THIBORD, you're the head of Corporate Equity Europe for broker Exane BNP Paribas. I will ask the people discussing in the, please, to sit down. Alain Godard. Thank you. So we can start this discussion, and we'll start with you, Michel Paulin, because OVH has been the poster child of the French tech for years, at a time where there weren't so much French tech companies, at least famous French tech companies, and it would be interesting to have your experience on the major steps. What were the major steps of funding for the group, and the challenges you faced at the time when you needed money?
Oh, in fact, it's pretty simple in the sense that we had only two phases of financing in the life of OVHcloud, which is not very common in the startup and after scale-up model, where we see Series B, C, D, F, G, H, K, Z. So in fact, Octave Klaba founded the company 23 years ago now, and he decided in 2015 to make a Series A, because it was self-funded and he owned 100%. He was one of the first unicorns at this time, and he funded 250 million with two, and this is a subject which has been raised, to private equity, American private equity, because at this time it was not easy to find funding above 100 million. And after, the Series B has been the IPO. So in fact, we had only two phases of funding in the history of OVHcloud. It's due to the fact that we have a model where we have never lost money. Our EBITDA has always been positive, and we were able during this time. We decided, however, to make a public offering, because we thought that to accelerate our growth, it was important to fund and to have fundings to be able. And also because we do believe that it had created for us very high level of standard of visibility, transparency, and gave us a little bit of international audience that we had not in the past. And also it gives access to new funding systems and type capacity. So for us, it was a great opportunity. And it has been a very interesting, of course, I would say technical experience, but more important for us, it was a human experience for all the employees.
We'll talk about that later. Just on the first step in the Series B's, you didn't find at the time French funds or to finance you?
I was not there in the company at this time, so the information I have is mostly second-hand information. But at this time, yes, to be able in 2015 to fund 250 million was not so easy at this time. It's only European and French pounds, so it was possible, but it was so easy. And especially the cloud, it was the beginning. It was a lot of risk, so it was much easier to fund. To find funds, and American funds, KKR and THIBORD, because they were our shareholders, a minority shareholder at this time, where really took the risk, but also the chance and the opportunity to invest in OVHcloud. So I think, yeah, it was a challenge. I think it has changed a little bit.
Yeah,
I think it has changed since this 2015. I really have the feeling, because we work a lot with startups, that the venture and the even scale up, now we have European funding. We took the decision to stay in France and to stay on the Euronext Paris, because we think also it's important to create an ecosystem of public tech companies, and to mature the market for the analysts, the research, to be sure that we have comparable, because today we are not numerous in the market, and it creates a little bit of scarcity of information, research, and knowledge of all the investors in these domains. And that's the reason why we believe we need to, we were one of the first, not the only one, there are, I believe there is, Extreme Networks also, which have been during the same period. So it's important, we're a little bit pioneer, but it's important to start like this, because we do believe there are a lot of opportunity and there is really great advantage to be public.
So you wouldn't do things differently today if you had to start it all over again?
No, I don't think so. I think we always have this tendency to look at always why we are late against the Americans, why we are different, blah, 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 blah. But we should be a little bit optimistic. And I do believe we have a lot of assets and we should really give perspective that today it's not impossible to make, even if you're a tech company, you don't need to go to the NASDAQ. This is not the gold land. I mean, France market is great. You can make it. Nothing prevents us from succeeding in Europe and in France.
Okay, fine. We've talked about the stock market and about funds, but we didn't talk about banks yet. So where does the banking system stand in the funding chain of scale-ups by ATIG?
Yes. Thank you very much for giving me the opportunity to participate to this panel. In fact, we have a quite strong model with a diversity of activities, both in the debt market, in the equity market, in the private equity, and of course other activities which can be useful to scale-ups, leasing, factoring, and all kinds of activities in the financial life of the company. So I think that the role of the banks in financing scale-ups is not only about, I would say, IPOs or activities on capital, but also on all these aspects. Another thing that developed a lot along the last 10 years is the hub, the ability to develop hubs to foster innovation and to be able to have companies at different stages of their development. And in fact, banks engaged in different experiences. Maybe our colleagues from Exane will talk about it, but this is important. The last point that I would mention is that the financing by banks in the EU is 3 euros out of 4, so 75% of the financing of debt is done through banks, whereas in the US it is the contrary. So in fact, elsewhere, the financial market managed to develop lots of pools of resources. And so maybe today what we have as an issue to deal with is not the scale of our financing markets, but the split between equity, debt, and the ability of debt operators to intervene also in the equity market. So this is one of the points that we have to solve, and what the Capital Market Union is about, in fact. Not only to develop, I would say, current activities, but to be able to engage in new activities.
After the great financial crisis, we already said that, we were saying what you said, that it was 75-55, and we would see a disintermediation in Europe, and would not grow towards an American model, but maybe have a 50-50 or 60-40. How come it didn't occur?
There is a rather simple reason, which is the lack of securitization in the EU. In fact, the path to the Capital Market Union was done for 25 years, I believe, and Delphine was also a witness to the beginning of this Capital Market Union in the EU. So the harmonization was done through the practices of supervisors, through the alignment of information to be given by issuers, to the functioning of markets, so the rule books, common prospectus, and also some measures to foster the development of saving products. But in fact, nothing was done to increase the size in a very decisive way. I will give you two very simple figures that I have here. Securitization accounts for 200 billion euros in the EU. In the US, today it's 3,000, so it's 3.3 trillion in the US. So this is a difference from 1 to 15. And in fact, it means that the pool of investment products and the ability to attract investors who want securitized products, this pool is not looking at the EU. And what you can say is that if we had a stronger securitization framework, there would be two effects. The first effect would be to alleviate the balance sheet constraints of the banking system, which would maybe enable them to finance more easily other asset classes, because in fact securitization is basically alleviating the pressure on your balance sheet. This would be the first effect. The second effect would be that you would attract other investors who simply today don't come to Europe because there is not enough securitization products to help them diversify their portfolio. So this would be in the end beneficial to equity financing as well. And on this issue, which is very sensitive, because when you say securitization, you can imagine, you know, the horrible subprime crisis, etc., etc. But there is probably a way to go from this, you know, 1 to 15 EU-US to something which is more reasonable without taking incredibly dangerous risks.
But do you really expect the Commission or the European Parliament to change with respect to securitization or the Capital Markets Union, because the Capital Markets Union is trended since Brexit?
The Capital Markets Union, once again, I can read, but probably we won't have time, but I can read you the extract of the speech that Mr. Fabius pronounced here in July 2000, so we were all 22 years younger, and basically everything was there. Harmonize the framework for supervisors, for issuers, for people who have money to save and to invest, and of course for stock exchanges. Everything was here, and lots of things once again have been done on rule books. But very few things have been done to create this pool of securitization. And we are today at an early stage. We have, I would say, contacts. I would not say for the moment that they are promising. But what we need to explain is that it has not only first-round effects, but also second-round effects on the fostering of financial markets. And we need also to explain how it is possible to develop securitization markets in the EU without creating huge risks. So how do you deal with that? But the first step, which is to show an interest in this issue, I think we're on good track. Now, how to do it? We're not here yet.
Okay, we've touched a major difference between the United States and the EU. Emmanuel, as a French banker in an American bank, you have this transatlantic view. Are there any other major differences that are hampering Europe and European companies from becoming bigger?
Yeah, thank you, Alexandre. I'll try to see what there is still to do to actually get Europe and France to the same level of, say, freedom of enterprise that we can see in the US. I do that maybe with three perspectives, because on one hand, we're advisors, whether it's on M&A, whether it's on private placements, whether it's on IPOs. So that's our first hat. Second, we are the largest asset manager in the world, actually with more than 6 trillion assets under management. So that's our second hat. And thirdly, and in Paris in particular, we actually invest our own money. We just created an R&D, research and development center of data applied to market activity. So this is hard cash we're putting out. We're recruiting people, quants, basically, and we decided to base them in France, not in Budapest, nor in Mumbai, nor anywhere else. And this is a global center, and it's here, it's up and running. We have already 40 quants, and we'll get to 100 within, say, 7 months. So that'll be good. So with these three perspectives in mind, and in no particular order, let me give you a laundry list of things that could be ramping up and that are still in the way, standing in the way of the smooth development of tech in Europe. One, public purchasing, contrary to the US, where the US government doesn't hesitate to do a lot of public orders, RFPs, and actually scale up their tech companies. Two, and that's maybe a little bit more French than European, we're biased towards telecoms and service tech rather than pure tech. So that's our bias. 3, regulations that are not harmonized in Europe. Therefore, we don't have a unique market. It's actually, you are addressing the French market and you need to go to Germany. You may be facing different regulations, whether it's labor or other things. It's complicated. And then the next point, but it's sort of almost similar. It's the level of bureaucracy, red tape, still very heavy across Europe. Then point number 5, and again, in no particular order, there is no currently storytelling about how tech is good for the general population. It's very limited, actually, and we need to explain why French tech is good for people, how many jobs are created, what's in it for France, what is a sort of technological quantum leap we can take, or what happens if we don't take it, because people need to understand where that is and what's happening. And then number 6, we need to have a deeper pool of resources. Now, Maya obviously addressed some of that. How do banks get into a position where they can actually invest? We can see institutional investors, and there are some initiatives that have been taken that are great, like TB or things of that sort. This is all great. We need to go further for the retail, because for retail, there is still a thought that people bought orange shares when they were 120 in 2000, and of course they were toast. And then when they wanted, and this is further away from tech, they were on EDF, and then it went up to 85, and now it's 10, etc. If we reason in that way, we're not getting anywhere. We need to find the right vehicles that are actually giving some form of yield, some downward protection, some floor, but are still exposing people to the upside. I think the BPI example of launching a product where you could enter, I think it was 5,000, the ticket, and expose yourself to many funds was very interesting. Actually, it's a way to give access to private equity and therefore to some funds that are growth-oriented. And we need more of that and more initiatives in that regard, which means, and I think that is really the summary of all this, is the way we need to think about it is not the French garden where day one you have some regulation and that's so great and it's all going to work. It's actually an ecosystem that we need, and it's already being developed, but we need to go further and tackle a lot of little things that then converge and create an ecosystem. And then the other thing here is that while it's great to have a lot of initiatives, and we need to keep going, we need a stable framework. And in particular, when there are tax incentives, etc., we should not try to fine-tune them every single year to buy them a little bit, because the level of complexity this brings is just making people, and retail in particular, they're lost in translation. So this then becomes a product for initiated people, right? People that have tax advisors and this or that, or basically on the hand of maybe their financial advisor and will throw them one way or the other, but they will not be really understanding what they're doing, which is contributing to growth, contributing to this technological quantum leap we all need to take collectively.
Well, that's a rich menu. But are you seeing the things going the right way?
Yes, definitely. I think the level of alignment between the players, and with all our perspectives, you have some are represented here, issuers, banks, advisors, investors, regulators, or markets. All that is going the right direction. I think people got it and understand what we need to do. It's of course slower than we all would want, but we are really going the right direction. I think the critical point here in everything I said is actually the explanation to the general public. Because if this is about something that's happening in Paris and in a couple of circles, and where the province is left behind and feels left behind, then we're going to collectively lose. Now, if we really indicate that, yes, there are some elites going ahead, but they're actually collectively getting to this quantum leap, then we'll be fine. And this is really what we need to do.
You want to react, Delphine?
No, I agree with many things. I would not maybe have the same laundry list. There are things that I really adhere to and others I have no sense, but basically we have the savings pool we have, and to be honest, it's strange because on the one hand, Europe has taken on board international norms and standards that favor a securitized framework and not really protected Europe from that when we do have balance sheet banks. But they are still super shy on securitization. So it's a kind of paradox. So, I mean, well, you're just stuck in the middle of two models, the one that is your standards and then the one that is politically possible. And I would add to that the main source of savings for investment in capital markets is in France in particular, but not only in France, channels through insurance. Mm-hmm. And there you have another lot of regulations who are also not conducive to investment in equity. So Solvency II on the one hand, but IFRS 9 on the other hand, which actually is, will, because it's going to happen next year, disincentivize insurers from investing in equity, public equity, because it's volatile. And so they will be favoring private equity because it's not volatile, it's not liquid, by the way, but, so that's strange. So what we should do is, try to create, either big reforms and pension plans. Well, there needs to be some political feasibility for that, or small rivers, or whatever, or try to work on the rivers we have. But this has to be a conversation. It's strategic.
Talking about IPOs and going listed, you're advising a lot of companies. Are founders and managers ready and well prepared to the idea of going public, like OVH was, for example?
Well, OVH and we helped them go public, was well prepared, but then for other issues, maybe I think it's key to have actually an equity story that is already in place before you're thinking about the listing. You need to have a club of investors that understand your story and get out of a zone where it's all about optionality. Well, my equity story, I want to make sure I'm adapting to the markets at the last minute. And so maybe it's about growth, maybe it's about resiliency, but let me hide it. And then I'll come out with a story 2 weeks after pricing. That doesn't work, definitely not. So this is all about actually having a strong equity story that is properly socialized well ahead the listing. And then I think for founders and managers that are all usually incentivized with paper, I think it's key to see the benefits of a listing. And the benefits are huge. I mean, some liquidity, some you can attract some talents by giving them paper and not deplete your cash. You have visibility that allows you to socialize with a broader public, actually, what you do, your concept, because sometimes it's not obvious to understand, and then you spin it in a way that helps your products, and that can be at the detriment of some competition that therefore is less relevant because they are just less visible. And so that's a great platform. Now, on the flip side, it is difficult, but it has to be accepted that it's volatile. And, there are huge valuations, it's all great, but you have to therefore accept that this can go down. And it's not the end of the world. It doesn't mean you become a penny stock, but it means, yes, it felt very rich, and then it feels much poorer. But this is all on paper, right? As long as you don't sell, you don't lose. So I think the benefits of an IPO are huge, and it's just the importance of preparing psychologically the founders and top managers of a company. It's very important that they accept that, yes, it is going to be volatile, it's going to be up and down, and that while they can observe the share price regularly, they shouldn't spend all day just looking at it and feeling what this means in terms of my personal wealth or not, and what I can transfer to my children.
Bénédicte, THIBORD, as a broker, how do you see that issue?
Yeah, thank you very much. I think that challenges for corporate post-IPO is very different for large cap and for small and mid cap. Out of the European universe, 80% have a market cap below 1 billion euros. So I will focus on the small and mid cap. The first challenge is research coverage. it has become more difficult since MiFID II because of the deflationist impacts of a buy-side research budget. I will share with you one figure. Since 2017, buy-side research budgets have been cut on an average basis by 50%. And so, as a direct consequence, most of the brokers have cut their research coverage on a small and mid-cap. So, sponsored research could definitely be a solution, but sponsored research, quality and independent. Because at the end, we need to make sure that investors who read the sponsored research will trust it and will take an investment decision based on it. And so the way we address it at BNP Paribas Exane is that, point one, the quality control process for sponsored research is exactly the same as for institutional research. And point two, there is no target price or recommendation on sponsored research reports, but only a valuation range. Getting sponsored research is necessary for small and mid-cap, but it's not sufficient. Because we live in a world where too much information kills the information. And I think that posting sponsored research on distribution platforms, just like Bloomberg or ResearchTree, does not help. At the end, based on a 2-year experience, I can tell you that you need to get a sales guy who will take his phone and call his investor clients and pitch the equity story. And then again, MiFID II has changed the game rules because local brokers don't have access anymore to these international institutional investors. The second challenge for a small and mid-cap is to meet international investors. And once again, because of MiFID II, and I would say actually since the position of the FCA on corporate access in 2013, brokers are not incentivized anymore to set up roadshows between corporates and investors, notably in the UK. So the last challenge is liquidity. And for sure, the French market practice, the liquidity agreement, which was confirmed as being and has having some positive impact on the liquidity of the stocks by an IMF report, is definitely a best practice. The next steps could be to discuss it at the European level. I would add, one thing is that when you are a corporate and you just did your IPO, your objective is to remain visible with international investors. So to make sure that you will get some research coverage, that you will be able to convince investors to invest in your equity story, that they will find the necessary liquidity to invest in your equity story, and also to make sure that there will not be any activist investor or corporate who will take a non-friendly stake within your capital. And so I think that the liquidity agreement setup should be fought for both at the European level because it includes this market monitoring component. That saying, the responsibility for brokers is not to push the information only, but also to assess it in terms of risk management for the corporates. If I tell you your volumes on the dark pool are 6%, you may tell me, so what? if I tell you your volume on the DAX pool are 6%, and it has increased since the last, for the last 4 days, and we also see some volumes on the derivatives and the shorts, and we think that someone is trying to build a stake on your stock, that's a different story. And this market monitoring component is part of a liquidity agreement. So overall, you know, I think that if you had asked me the question 1 year ago, I would probably have been more positive because the market environment was slightly different. When I look at the performance since the beginning of the year, the MSCI small cap index has decreased by 20% and Eurostoxx 600 by 15%. But I would like to conclude with 2 positive comments. First one is that I think the Euronext Tech Leaders Initiative, led by Delphine, is definitely a great initiative. And there are probably some best market practices abroad that we should look at more carefully, notably the star brokership in Italy. And the second point is that when you look at small and mid cap, the way investors invest in these companies is very much via stock picking, which means that the correlation between the stock price and the individual corporate performance is much higher than for a small and for large cap, which I think is good to know.
Thank you. Delphine, you would like to react on these different points?
Yeah, just maybe it's useful that you say what is a mid cap and with the ceiling of a mid cap in the definition you use, so that people realize what we're talking about in terms of market cap.
Below 1 billion euros.
1 billion. Okay, 1 billion is the Euronext definition. But when I talk to buy side, they tend to global buy side. They tend to say you're a mid cap up until 5-7 billion internationally. So, well, it's important to understand that the fishing pool is actually targeted to companies which we consider large caps, but that actually are international mid caps. So the debate is for all those people. I totally agree with many things you said and everything. It's interesting that in Europe, because we are fragmented politically and we don't trust each other, etc., we had a tendency to have very pure discussions, and we've emboldened research and brokerage. We've put a lot of regulation under MiFIR, increasing competition, which has given a big advantage to the bigger brokers. We have all those great. We are very, I would say, pure on all the standards, etc. And in the end, we don't create the ecosystem or the incentives or the trade-offs that can sometimes explain. So we've unbundled a lot, and then we realized that the actors don't have a business model, and oops, there are consequences for that. So I think we should be a bit less puristic, or I don't know how to say that in English, sorry, and a bit more reasonable in understanding that everyone in the food chain has to have some element of business model, and otherwise we will end up with a system which is completely demutualized, where it's a great pan-European market for large caps, which benefit from all the good situation, but what happens is that you don't have this environment for mid caps, and mid cap can be relatively big companies, and this is what we have in Europe if we want to grow them to large and success stories. So in Euronext, we are a primary market. We list everyone. We trade everyone, and we want the ecosystem to be as rich for everyone in the food chain. So that's on the general market. Then on what's needed to be to be listed if I have my set of advice?
Yeah, some advice, because you train also.
We don't trade ourselves, but we
train
we have the trading engine,
yeah.
and of course it's always better to trade on Euronext than anywhere else. That was my pitch. But just maybe to complement the advices, even though all those guys are big, but it's important. I think the first advice is to be, to be a success story, you need to be convinced and determined that you want to list. It really has to be a conviction, and you need to of course, you need to be prepared, etc., structured. That goes without saying. What Emmanuel said about some element of predictability, equity story that is clear. You're not going to say, okay, I don't know because anyway I will pivot every quarter. That's not the story you can sell the markets. But also one message is that you have to, and it's not so easy because companies come to the table with a cap table that sometimes is quite complicated. And so we used to have, family-owned companies listing, and that they know they were going to stay for a long while, and so it was an easier discussion as far as initial valuation was concerned. So it's important that you know that you're going to have to invest in the long term for your valuation. Like Emmanuel said, there are going to be ups and downs, but you have to manage the people who wants to have the short-term impact of valuation towards the long-term story. Because what is essentially public markets, what are you doing when you list? You're retaining your long-term independence by diluting your shareholder base because you address a multitude instead of a few players. As long as, of course, you have a clear strategy and they trust you because, you also are contestable and someone can wipe it all, take it all. So basically, investing in that long-term credibility is super important, including as far as valuation is concerned. And there's a trade-off there between going from a paper value to still a paper value if you don't sell, but a price every second and below that.
Michel, Paulin, on all that has been said, how do you consider that? What was the strategy of OVH?
Okay, I'm going to make a sales pitch about the strategy of OVHcloud. No, I think I prefer to say that it's a little bit what you said about the equity story. Our strategy first is to make great products and to make our customer happy and to find the ways to do that in a tech environment and to try to differentiate ourselves. And now we can prove that we are able to do that. So it's not financing. It's really business customer-centric approach. And I think the IPO for that is a window. It's not a goal. It's a window. You enter a new world, which is pretty strict when you need to be disciplined, you need to be transparent, you need to master your communication, you need to be compliant. And in fact, your equity story should be only a way of expressing in financial words what is your strategy. I think trust is the most important word I use with the teams during the IPO process. We prepared during 2 years that, because when you are going to sell some shares to the market, in fact, you want to install the trust. And I think if you have a discrepancy between the strategy of what you are and the equity story, and if you want to reinvent to please the market, long term it doesn't work. So I think we need to be compliant internally first to define what is your strategy. And again, the purpose is to make your customer happy and to create broad products. And after, you want to say how you are going to do that and what will be. And the equity story is a consequence of all that. And Octave is the founder of the company, is a minority shareholder, he still owns 70% of the company, and is for the long term. So in the moment, the market is a little bit, I would say, like this, bumpy. Well, yeah. We are not there for tomorrow. We are there for decades. And I think our strategy is really around that. And we really do believe that the IPO gives us the long-term capacity to finance our growth. And it's a way to create a partnership or a trustship with investors to help us to continue to grow and to continue to develop ourselves according to what we do believe is our strategy. And if you want, after, to sum up what is our strategy is to create an independent, open, trusted, reversible cloud provider in Europe, which is an alternative to the GAFAM. So it's not more, but not less than that.
Do you feel that the equity investor base in France and Europe is large enough, and that there is enough equity research for these investors to understand your business model, to follow the share?
I think, yes, we have proven it. Because, our IPO was successful. No, it's not a goal. So I think, yes. I think, of course, we can make a lot of progresses there. I think research, analysts, comparables, and again, I invite all the entrepreneurs to come to the public sector, to make an IPO, to join the club. Because as many we will be, more investors will be ready to invest. So if you don't, entrepreneurship is to dare. If you don't try, you do not succeed. 100% des gagnants ont tenté leur chance. And no, but seriously, it's very important to say that's why we do believe that, yes, we have a lot of progress to make, but at the same time, we need to feed the engine of progress. And I think regulations, practices, advice are key in this element to create a positive momentum. And I don't see intrinsic reasons why we could not do that. We have the talents. We have a bunch of investors. We have, the engineers for the tech. I think there is no reason why for me. However, we need to be helped. As you said, the public sector, for example, should help the tech company. We have received zero funding from the public sector since the creation of OVHcloud. We are the only cloud provider in the top 10. We have not received, I would say, financing from the state. US has massively invested, and the public ordering of the public sector in the US is immense. I don't talk about China, because there it's even, there. So I think, yes, we need to be helped. But this is, on the financial standpoint, I think we have everything, but we need to dare. We need to entrepreneur. This is entrepreneurship game.
Maya.
No, I would like to maybe to say the same thing, but in different worlds. We described basically a series of constraints which is depressing, we can say that, and which develops again and again and again. However, we see that unicorns are more and more numerous. We see that there are initiatives to develop the quoting and listing of tech companies. I would remind that we have 200 and almost 90 unicorns in Europe, 10% of which are in France. I'm including the UK. I'm talking about the continent, the geographical continent. So we are successful in developing big companies, tech companies, and the basis of all that is to be able, as you said, to look at the strategy and to have a very good knowledge of the market. And I'm not talking about the financial market, but about your own market, a very good knowledge probably of your people, and the ability that they have to serve your clients. And I have the feeling for years and years that in our jobs in the banking sector, but in the financial sector in general, the ability to develop a knowledge on your client is not only coming from compliance and obligations, but also from the relationship approach. We have lots of relationship banks and not so many transactional banks. And this is a strength that we should develop. It's true that there are rules who prevent us from giving some information to the clients, from giving quality analyst reports. And we downgraded the quality of information that we collect on the clients for their own sake. However, the idea of having relationship banks and not only transactional banks is still very, very big. And probably with the development of all the unicorns and the tech sector, it will increase again and again. Because if you compare those almost 300 unicorns in Europe, they are not comparable. I don't know if they are strict peers to OVH. Each of them is different. So you can't say, I'm going to make a report on unicorns. I mean, it's just stupid. It's just adding things which don't have anything to do together. So this importance of knowledge of customers is very important, both for the tech companies and for the financier who advise them. And of course, what is done in Euronext to develop this segment with the constraints of each of the part of the ecosystem is also this power of knowledge to, I would say, to overcome all the obstacles.
Maybe just a word on the environment. We have 300 unicorns, but some of these unicorns still haven't found their business model, and we're seeing a violent repricing going on in stock markets, but also private markets, like we've seen yesterday, for example, with Klarna. So, what is it changing now? What could be the impact on the available funding for scale-ups in maybe 12 months' time, Emmanuel?
Yeah, so when we look at what's happening, 50% of the companies listed on NASDAQ went down by 50% compared with a 52 weeks high. So yeah, spectacularly, it has gone down. But I've got a first message is, one, investors care structurally about tech. So they are there, they're not gone. We have a multitude of conferences where we bring together companies, concepts, investors, etc. The last one was in London, called NextGen, and the appetite is there. Now, second point is, yes, people are going to be more choosy because money suddenly has a value. The capital is not for free. So, yes, and this is actually, when you think about it, it's not bad for the economy that actually you have to allocate. You actually have to pick things and not just go randomly across the board and just say, yeah, I'm investing in everything because I don't have any cost of capital. That just doesn't work structurally over the long term. So there is a correction, it's happening, and so therefore it has an impact on the valuations. Alexandre, you just mentioned Klarna, so that's like 86% down between two rounds, right? It was on the previous round, the value was 45 billion, and now it's 15 billion. And we could have many examples that just show exactly the same, or people that are shying away from doing another round because they don't want to crystallize a number and they still think that this is going to come back. And frankly, if they don't have revenues and have a business model or concept that's far from proven and that is still very shaky, they should actually refrain and just see whether they can weather the storm and think about cutting costs first, finding the concept, and then maybe getting back on their feet while they still have some cash actually in-house. So that's second point. Clearly, valuations are down. The third point is that there are not a lot of investors, of US investors, that are currently looking at Europe. And there are two things to take into account there. Is one, when there are difficulties, you look at things you know very well. So if you are a US investor and you look at companies that you were thinking about buying at 100 and now they're valued at 20, you will first, you will first go for them. You're not going for the far-fetched thing on the other side of the Atlantic. Nevertheless, some of them will be a bit opportunistic, and will come and will do certain things, but at very depressed valuations. And this really reinforces the absolute need to have the ecosystem in place in Europe so that actually we have pools of capitals, investors that are familiar with the companies that are based here, whether they're in France, whether they're in Europe, but this is absolutely key. So in conclusion on this point, it's clear that today the IPO market is shut for tech and actually more generally, it's very difficult. You saw the IPO of Deezer. I don't want to criticize Deezer, of course, but at the time of an IPO, it's sort of difficult to...
Not an IPO, by the way.
Yes.
Yeah, SPAC.
Yes, and SPACs are even worse, true. Yes, thanks for pointing out to that. So, I mean, currently going out to the market, to the listed market is just very, very difficult. And you'll get punished for that, etc. It's not the first time that the IPO market is shut. It reopens. It's just a question of when, right? Not a question of if. So we don't have to be worried about that and think that now it's all about going private. No IPO is possible. Everything is private. Nothing is public anymore. It has been shut several times, and it will just reopen. It's fine. The other thing to take into account is that in 2000, Europe shied away from tech. And this was when the first internet bubble burst, and the US didn't shy away. They kept investing. And Europe has been paying a price for that we have been late to the game on many things because we restarted very late. So we should not shy away because now we feel, oh, it's correction, nobody's interested anymore, it doesn't make sense, let's just go back to the old industry that we know inside out. We need to be able to invest in these two worlds, if not more worlds, but that is absolutely key.
Okay, thank you. We started a bit late, so we maybe leave a few minutes. I don't know if there are any questions from the audience. It's time if you want. Don't be shy. No questions. I have one more for Bénédicte. Yes, one question? Yeah. Ah, cool.
Thank you very much. So my name is Emmanuel, and I come from Morocco, from Casablanca. So one of the things that will be just a kind of repetition of what you have mentioned for the first round and the second round, Alexandre, is our questioning as a consumer, what will change? What will be the change? Because that kind of goals, we have established these goals 10 years ago, and the consumer who will make the liquidity in the marketplace is just like questioning, especially now in the crisis time, how can we just push toward a decision and say that this time we're making a good call. Thank you very much.
Who wants to take it?
Knowledge.
Are we talking about retail? Is that what you mean with customer? Okay, just to establish that. You see, I made actually a couple of days ago in Aix-en-Provence a full-blown intervention on that. So I think there are some incentives to bring. We mentioned earlier that Delphine, I think, mentioned earlier the life insurance product in France. So we typically in France have a bias towards fixed income products, which are livret A, livret A, one way or the other, compte sur livret, averse to risk, let's make sure the money is still there, I get it back. I have nothing against livret A.
And we kept it when there was no revenues, but yes, for some reasons.
Exactly. And I have nothing against the livret A. It is funding real estate, etc. But it's a question of balance and of allocation. Where do we want to allocate actually our savings? And if we don't incentivize retail to actually take some risk, then it's difficult. And there are some ways to do it with hard regulation. So, for example, if I take the life insurance product, which is a popular savings product, and it's sold by banking networks and insurance companies, etc. You have usually two compartments. You have the Fonds Euro, which is a fixed income instrument, and that is supposed to yield some interest. That is not necessarily planned, but you will get something that is calculated mechanically, depending on the savings that are underlying it, or the investments that are underlying it. And then you have unité de compte, which is actually the part where you are supposed to take some risk. So the hard way to go about it is to say, well, actually, if you want to have access to life insurance with the tax regime that comes with it, you can only do 50-50, so that you're actually forced a bit to take some risk with part of it. There are other ways which are more in the nudging way, where you say, if you invest, say, 80% of your savings in unité de compte, then you'll get a better reward on the fonds euro. That's more nudging, right? Your choice, but the more risk you take, the better sort of interest rates you get. And that we need to develop more of. And of course, then the backdrop is the one that was highlighted by Delphine, is that there is a regulatory framework behind it that is actually not great for insurance companies, and it's not really incentivizing the insurance companies to go the risky route, given how things are then panning out in terms of their books. That would be my 2 cents.
And if I can give you hope on a point, I was last week at a financial education session, and part of the students did not know what was a livret. So maybe there is some hope, because they were...
Did they know the other products, or they just didn't know anything about
They
finance?
knew what savings were. They were quite good at fraud, at detecting fraud. They were quite good at that. And on savings, at least they didn't know the products. They knew the concept, but not the typical baby product.
But it's also an example where in Europe we've put a lot of emphasis on, the theory that, which is, in principle very good, that if you want to have people, investors, invest in capital markets, they need to be trust, and so you have to have all sorts of investor protection. It's great, it's a very good pitch, it's true, but then if you create a lot of, suitability, appropriateness tests, and, we are all marketing animals with, a lot of cognitive bias, and if the first thing you have when you are in a process is that you've been told like 20 times, are you sure you want to lose everything? You're not going to do that. And you're never told, by the way, if you don't invest, you're going to have inflation and you're going to be eaten by it. That's never said anywhere. So you have those bias, and we're a bit naive about that. So I'm not saying that should be the jungle, etc. But for me, it's very striking that somehow we let the retail invest in crypto, where it's a jungle and it's super, but it's outside of the perimeter so far. And within our perimeter, we bombard the investors with a lot of incentives to please make sure that you are absolutely sure you want to lose everything, etc. So that's not the way to. And on top of that, equity in particular, when you're in direct equity, it's industrially more difficult for banks because of all the infrastructure. We didn't discuss infrastructure, but it's a big reason why there is a market fragmentation. And so a bank, between selling a product that is a fund or an investor or assurance vie, it will be industrially for it much easier, commercially, industrially, than pitching le compte titre et le PEA.
Yeah.
So that has a lot of impact.
Okay, well, that will be the conclusion. Thank you very much for your attention, and remain seated for the next session. Thank you.